welcome back to the Junius Maltby channel and another lost decade. That was a little attempt at special effects without using any special effects. Welcome back to the Junius Maltby channel and welcome to a lost decade of zero interest and economic uncertainty. Starting the day off, we're looking at charts, gold and silver rising as is expected if you've been looking at the news and reading the periodicals, the newspapers, and watching the MSM, the mainstream media, and the little talking heads jibber jabber and chip their teeth at the market news. And what is that news? Well, there's a Fed meeting coming up, and there's all kinds of predictions on what may or may not happen, specifically whether or not the Fed is going to raise interest rates. As you all know, Janet Yellen said last year it was most likely that by the end of this year they would raise interest rates. Two bits of news we're going to cover today, that and the durable goods orders. Not a big deal, but it's what they were talking about yesterday on NPR. I don't really pay too much attention to it, nor do I care. However, it is something that investors and people in the stock market like to look at, and that's the orders for what's called durable goods. Look it up, read about it. Interesting stuff. Anyways, it's dropped for the second month in a row, and that does have some ramifications for the markets. But the thing I want to talk about the most on and focus on is this zero interest rates, which is, we all know here on the channel, what is going to happen. And why is that? Well, the media is actually using words that I would use. The Fed's hands are tied. They can't raise interest rates. The economy is stagnated. There are still a lot of problems and flaws with this economy, with growth, with employment, with wages and inflation, everything. So their hands are tied. They can't, if they raise interest rates now, because we are the debtor nation, we have debt, everyone has debt. This entire nation is currently founded on, not previously in the past, but today everything we do, whether it's college, a car loan, going and buying a couch, people buy their groceries now on credit cards. And as we all know, everything is tied to ultimately the interest rates, your mortgage, your credit, all this. The interest rates from the Fed, which loans money to the banks. And while those interest rates are zero, banks are getting easy money, and therefore they can pass on some of those lower interest rates. And because everyone owes money, if they raise these rates, it's going to kind of jam up the system. It'll be the wrench in their gears. And as the easy money happens and the heroin of free money and low interest continues to pour onto the economy, well, the hangover severity will just increase further down the road. We're just kicking this can down the road. A lot of the guys we respect, they've painted that picture and that allegory quite well. If you've ever listened to or paid attention to the likes of Ron Paul or Peter Schiff, some of those gentlemen, Mark Faber, Jim Rogers, they kind of paint that picture of the economy and America having an addiction to this easy money, this cheap money, this low interest. And well, the Fed's hands are tied on interest rate increase. That's what the headlines are telling us. And what we're seeing is a lot of articles coming out regarding that. The question arises, will gold soar with the EU QE? Because there's a quantitative easing being announced again to kind of save the euro, which just shows that this is a world problem. It's systemic. It's not just isolated to here in the United States. We've seen a slowdown in China. We've seen economic issues striking the EU, which we've talked about on this channel as well, although not as at length as we have regarding American problems. Just so happens that's the country that I live in. But gold prices should appreciate as the Fed's hands are tied. That makes sense. The Fed's not going to raise interest rates because their hands are tied. And as a result of that, well, what happens when there's a bunch of easy free money pumping into an economy? It has to go places. It has to trickle through and flow through the economy. And when you have more dollars chasing a fixed asset such as gold, or there's a commodity such as gold with a limited supply and limited production, again, we don't have time to review all the details and reasons behind that. There's 25 videos probably in the archives of this boring channel, which you could dig through and watch regarding money chasing gold. But being that gold prices should appreciate as the Fed's hands are tied, that is going to happen. You and I most likely know it now. I understand there are some logic-defying events that we watch take place throughout the year. Times where the interest rate has remained zero for so long and there's so much money out there, and yet gold stagnates or drops in value. And as I've reminded you guys before, there's no reason to fixate on daily gold prices, monthly gold prices. But this is a bit of information that you can put into your little mind, your toolbox, and just kind of bank on it, if you will. No pun intended. But with the Fed keeping interest rates at zero, which we're almost certain they're going to do, it's going to have an effect. A positive effect, I think, on gold prices. Now, here's an article I pulled up. We'll just go through the summary bullet points. Gold prices should appreciate as the Fed's hands are tied, and dollar strength should fade as a result. Likely, however, the dollar could strengthen based on weakening currencies around the globe, which we've seen happening recently. Recent U.S. economic data softness makes Fed action today seem imprudent. The ECB's, European Central Bank's, recently solidified support of the Eurozone economy via expansionary monetary policy puts the Fed in a bad spot due to how a rate hike would impact the dollar. The dollar should retrench on Fed inaction this week. Gold should gain on dollar retrenchment this week. And over the longer term, on increasing expectations of economic recovery in Europe and longer term dollar stabilization as time progresses. Now, we're already seeing this happen. China, other nations, even individual buyers such as yourself, you people out there, are buying more gold. It's happening. It's been happening. Here's an article, Gold Demand Rises in Third Quarter on Surge in Coin Bar Buying. New York, October 27th, so this is yesterday. Surging demand for coins and bars and a rise in buying by central banks pushed physical gold demand up 7% in the third quarter. An industry report showed on Tuesday, though the market remained in a surplus of 51 tons. Demand for gold coins and bars jumped by 26% year on year in the last quarter. GFMS analyst at Thomson Reuters reported in the quarter 3 update of their Gold Survey 2015. Retail investment surged in top consumers, India, China, and Germany, and buying rising 30%, 26%, and 19% respectively. These three markets alone accounted for an additional 26 tons of retail buying. I find it interesting also that up there they mention central banks. The very individuals that tell you that gold is worthless and you should not own it are increasing their purchases of gold. Again, the day that central banks dump their gold out onto the streets, declaring it worthless and a barbarous relic, and the most worthless commodity ever conceived, is the day that I will buy into their Keynesian philosophy and policies. If you don't believe in gold, then why do you buy it? Just as Ron Paul asked Ben Bernanke, and Ben Bernanke's answer, well, out of tradition, I guess. Well, when you're spending billions upon billions upon billions of dollars on something out of tradition, you might want to reevaluate your decision-making process. All right, so again, here's another article backing up what we were just talking about. Lori Williams, gold moving up ahead of the meeting deliberations. So perhaps today is the next crunch day for gold with the U.S. Fed's Federal Open Market Committee meeting, which could yet recommend the commencement of an interest rate raising program this year. I don't think it's going to happen, guys. I don't think it's going to happen this year. I don't think it's going to happen next year. I think the Fed is in a closed-door hidden panic session. I think the powers that be, those that sit in these dark little rooms and make these little decisions, big decisions that impact us globally, I think they know and realize, just like you and I know and realize, something is sick and inherently wrong with the world economy, and they're trying to figure out what to do about it. I'm sure there's solutions that are proposed, and lots of heated arguments and spilled milk, but it's going to be interesting. Like I've said before, buckle up, keep stacking, and pay attention to what's going on around you. But as always, try to put emphasis on those things that are most important in life, which is your family relationships, time spent with family, your loved ones, your friends, and things that are truly, really important, not these material and wealth possessions that we talk about here, which we need to have in order to get by. Don't get me wrong. We need to have money and be smart with money and have our little hoard of gold for security in the future. But there are things more important than all of this than to worry about. It's not worth one day less of stress and sleepover. So there you guys go. I'm glad you're here. As always, I can't believe how much the channel's grown since I took the break this summer. So we'll kind of wrap it up here, and I'll say a couple things on a side note. But yeah, the channel has exploded apparently in growth with all of you guys liking and subscribing and sharing or whatever you do, that I tremendously appreciate. I can't tell you enough how much I appreciate each and every comment. I read 99% of them. I try to get on there when I have time. You know, I am busy doing other things, but I try to answer your comments. I try to participate, and I like seeing you guys have the conversations between each other as well, and kind of make this a community meeting place, kind of a digital town hall where we just get together and talk about these articles and these situations, these stories. And I see you guys helping each other out and discussing things most of the time quite politely. And you know, the channel's blown up to what? We got 202, 203 videos, all because you guys have motivated me and encouraged me to do so. You know, there's times where I felt like just hanging up the hat, but you guys keep up the motivation there, and seeing it grow to over 5,000 subscribers now, 5,200, actually puts me in a limelight. And sometimes I get a little nervous about it because I realize there's quite the population out there that sits here and tunes in and listens to my ramblings and little headline clippings. So I appreciate it, guys. You guys have really, guys and gals, individuals, all of you, thanks for supporting the Junius Maltby project, the Junius Maltby channel, and let's keep it going strong. Hit me with ideas on stuff you want to talk about, discuss, and as always, thank you all for being here. I can't say it enough. Thank you.